Good morning, traders. Today is Thursday, November the 15th at 6:47 a.m. Starting with France, we had GDP come out and it was rather upbeat, not by a lot, but it ticked up quarter over quarter, 0.2%. Year over year was actually a 0.1 tick down. Consensus was 0 on both of them. A lot of economists are worried about the fourth quarter. You see this 0% line right here. This is what everybody's watching. If the fourth quarter proves to be weak and we get below this, then the recession will increase. Next, we have Germany GDP. It slowed a little bit by ticking down 0.1%. Year over year ticked down 0.1% as well. Taking a look at the chart, same here. We're still a little better than France, but we're hovering around the 0% level, and a lot of people, again, are worried about the fourth quarter. Next, we have Italy GDP. Now, the prior was negative 0.8%, and the consensus was negative 0.5%. We came in better than that at negative 0.2%. Year over year ticked down by 0.2% to finish off at negative 2.4%. Moving lower to the chart, we're right around the 2009 levels. But we're not as low as we were during the economic collapse in the United States. So if we could get going in the next quarter and get above 2%, that will be a good thing. But we still have to note that there is a lot of debt on these countries' balance sheets, and we're looking forward to some kind of a rate decrease and maybe some more stimulus coming in, weakening their currency and driving these countries higher. See, a lot of the problem is in the European hemisphere is the countries that have the surplus don't want to loan to the countries that have the deficit. That was the main goal when they created the European Union, for it to work this way. Poor retail sales came out of the Great Britain today, month over month. Actually ticked down a lot, negative 0.08% compared to the prior of 0.6%. Year over year, we ticked down from 2.5% to 0.6%. Inflation was subdued, but as we can see, we trade in a large range between 1% and positive 2.5%, pretty much since 2009. Now, if we start leaking down further and get to negative 2.5%, that could be something that we need to watch out for on the next report, which comes out December the 20th. Here we are. Now we have the European GDP. And after I just gave you the other countries' GDP, I'm sure you could pretty much figure out what this is going to be. It was a downtick. Quarter over quarter prior was negative 0.2%. We came in negative 0.1%. Year over year ticked down by 0.2%, which is another bad thing. It's a technical recession. Now, if you read through the articles, which I did, what you're going to note is that Portugal was bad, Netherlands was bad, Austria was bad, and Cyprus was bad. Estonia ticked up as well as Finland. But if we just keep looking at the same countries that are causing all the problems, they're really not improving that much as they need to do. That's why I think there's going to have to be some central bank intervention in maybe the next month, maybe in December we could see something. GDP, see, it's holding below the 0% level. That's not good. Year over year is now moving down. For the United States, we have the CPI coming out today. Prior was 0.6%. Then followed by that, we have jobless claims, and then U.S. Empire Manufacturing Survey. And then at 10 a.m., we have U.S. Philadelphia Fed Survey. I read through every single article. A lot of people just read through the important ones, but I like to get a gauge on the entire economy. I've actively follow 50 economic indicators on a regular basis, and I'm going to start offering a service that gives you some insight into that. But anyways, 11 a.m. we have the petroleum status report. Remember, crude was holding above that 85 level, started to tick up due to the attacks yesterday in Israel. And if this number comes out showing that there's more demand, we could shoot right through this $87 level. Earnings calendar out. Look for Buckle to report, Canadian Solar, Children's Place, Dollar Tree, GameStop, Ross Stores, remember Ross Stores had been declining massively. So we're going to see if we could beat the 72-cent consensus on that. And then we have Target and Walmart. After the close, AMAT, Aruba Networks, Autodesk, Dell, Dole Food, Gap, Intuit, Marvel, Cena, and Wet Seal. Quick look at futures. After the Dow being up for a majority of the morning, it now started to sell off ever since 550 when I was first looking at the market. Everything is pretty much around the break-even level. Russell sold off aggressively yesterday. If this market is going to continue down, you're going to need to watch the Russell for weakness. Gold down 9 points. Remember, 1737 was resistance. Crude oil spiked up yesterday, still holding above 86.50 level. Silver marginally lower. Dollars higher. Euros higher. A lot of people are looking for the euro to move lower. That's something to watch. Bonds are lower. That's the news. Good luck trading.